morning. Happy Wednesday, everyone. Wherever you are in the world right now, I'm so glad that we're here together. This is Jordan with Conquer Trading and Investing, getting ready here for our live stream. It's going to be an important one, a really important one, because you know what? It's one we're going to have to work for. This is more of a work day. We're going to put in the work. We're going to be focusing across the markets. Quite a surprise this morning, catching me off guard to the degree that the CPI really blew out estimates. Absolutely astonishing. We got to take a look across all markets. That includes those traditional markets. I have to make sure that I have that feel, that macro feel that keeps me on the right side across all markets. We're going to be answering some important questions today about the 4-year cycle. Listen, if you're new here, welcome. And if you're not, welcome back. I am so glad that you are here. It is good that you are here. Luke, Michelle, Team Randall, Rainer, everyone, let's go ahead and get it. We're starting off here with Bitcoin this morning, trading at 56,342. People are wondering, when is that melt your face off move coming? I do not have the patience to stick with the bull of all bulls. Actually, the bull is bucking me off by kind of just like, you know, not going anywhere. It's been 2.5 months. It's been 2.5 months, and 2.5 months ago, price was exactly where it is right now. What are we looking at? 62 days. Actually, we could bring that back further. I'm so sorry about that. For 81 days, for 2.5 months, price has stayed around the $56,000 level. Jordan, I'm giving up. Actually, you know what? Forget that. I'm jumping into AAVE. AAVE up 16% versus Bitcoin this morning. Forget that noise. Bitcoin is boring. Bitcoin is boring. I want some excitement. You know, someone contacted me yesterday. I felt really bad. They started actually, I wanted to say exploring some altcoins. I wanted to say experimenting. They started gambling in the altcoin market and doing it with leverage. And, they built themselves up over the past year, over the past 6 months, quite a nice trading account by being invested into the bull of all bulls. And then they, the FOMO got to them. The foam, and they wanted more. The greed got to them. It's a market cycle, fear and greed, and then all of a sudden they capitulated. They lost everything. It's very, you have to be smart. You have to be calculated. You have to be able to sit on your hands and do nothing to make money. The great Jesse Livermore reminisces of a stock operator. I made the most money in my career by sitting on my hands and doing nothing. If you don't have that capacity, if you do not have that capacity, this is probably not for you. Bitcoin, 56,319. Do you think this trend line that we're watching is in play? Do you see how we spiked into that last night? By the way, not only did we spike into that trend line acting as resistance last night, and that's where we ended. Do you see over here this channel that we broke down out of into the support? You know, bounced that. Yes, it was the trend line resistance right here, but at the same time, it's also that channel resistance, a confluence of resistance right there. Boom, you could just see it right there. And that's where we are. I'm going to remove those right now. I'm going to remove that. We're continuing and waiting until we break above this line. We're going to get another look at that and how this line is actually a fib line. Quite some interesting stuff shared yesterday on the Discord channel, on the Bitcoin channel inside Discord. And right now we wait. We wait and we wait. Let's take a look at what's going on. I told you this morning that, Gene, this is what it's all about. Managing risk and your own psychology. Always a work in progress. Over 20 years in the markets, and I'm learning and working hard each day. I think this is a work session. I think this is, you know what? Sometimes you don't want to do it. Sometimes this is a work session. This is like when you're training and you don't feel like getting out there and you go do it. And that's where you get the most money. Well, that's where you get the most results, right? That's what this session is today. Let's see who has the ears to hear us today. All right, let's see. We're seeing the CPI blowing out this morning. The headline, by the way, right? U.S. core consumer prices explode higher, fastest pace since 1981. Don't worry, it's transitory. Don't worry, the CPI is fraudulent anyway. We can't even hide it anymore. We can't even hide, but it's transitory. Don't worry. Listen, all as we're looking at is we're losing purchasing power of the US dollar each and every day. And I'm just going to come down to the bottom over here, right? So look, this is the real average hourly earning. And because price of everything going around you is going up, and because wages are not, your purchasing power again continues to plummet, right? Anyway, what that means, I want to take a look at how the markets are reacting. By the way, the dollar is selling off. Look, whoa. You probably don't see what I see. Let me clean this up. I keep cleaning up my charts. And then like I have so many different instances of MetaTrader, That's my 20 years experience showing right there. Of trading views showing all over the place that for whatever reason, either which way. Look at that. And I just want to show you. I don't really care if I find the flow or not today. I'm here to put in some work, and I'm here, to get to what's important. I'm watching this bear flag over here, all right? I want you to see it. Do you see that we just right now, breakdown out of it, came in for the retest this morning. As the CPI print came through, the DXY started rising, probably because they're thinking, the Fed's going to have to raise rates. And now what's happening since? What's the 10-year doing? Just let me check in on it. 10-year staying steady so far. Let's see what happens in about 15 minutes as the bell rings. What? Sorry about that. What did I want to say? Probably they're realizing over here as all of a sudden CPI prints, DXY is rising. They're realizing, wait a second, the Fed can't raise rates. By the way, remember they told us, hey, we're not going to raise rates until the jobs come back. But at the same time, you have the US.gov just paying people to stay home and not get jobs. How are the jobs ever going to come back if they're paying people to stay home? And if the jobs don't come back, is the Fed looking to raise rates? I think that's what's being priced into the market right now. We'll see. We'll continue to watch. We're going to give this a little time, and we're going to come back and take a very good look across the markets, including when we could probably get back into the Nasdaq over here, where it's time to stalk this as a predator, as we're drawing down about 7% right now, waiting for the first sign of repair. We're going to look at what that possibly could be together, and whether or not, you know, someone that's highly aggressive, would you look for that one? I don't know. We're going to talk about if we got this first repair, what it would look like, how you would trade that, and when you would need to watch on your downside to get back out of it. But first, let's talk about what's important over here. Let's get back to mission control. To mission control, take a look what's going on over here. Make sure that we have that situational awareness we need to ride and stay on top of the bull of all bulls. Because right now, as price has been sideways for 2.5 months right now, going on 3 months right now, people are getting tired. People are getting, when's the rip-off face? When's the rip-off? I know Greg's not a believer in the Fed. I know a lot of people think that the Fed has kind of lost control. My own personal belief, by the way, is that the Fed, they're diabolical. These people are so calculated. The only thing is they don't have the same interest as us. The only thing is they're out for the interest of their shareholders. What they're doing right now is basically, you know, on purpose, they're diminishing the middle class. And the top 0.1% or 0.1, they're getting wealthier and wealthier and wealthier as they introduce UPI. Do you remember a year ago? It was March. It was the end of March 2020 on Conquering the Markets when the Fed went ahead and acted, expanding their balance sheet by $4.1 trillion. And I said, listen, this is not going to be over until UBI is introduced. We're seeing UBI being introduced. It's getting clearer and clearer. And anyway, let's get back and take a look at what's going on. Look, we're watching Bitcoin over here consolidate at a point in time in past cycles where it was consolidating over here. We're watching Bitcoin right on time. I just wanted to pull up the halving tracker because right now we have Conquering the Markets putting out way better chart. Big shout out to Ted. Big shout out to Ian. Big shout out to the whole community. But at the same time, the halving tracker has been just an exceptional guide throughout this time we spent together. So I just wanted to pull up a chart over here showing that we continue to be right on time and just lots of love over there. I think I wanted to get back to this later, but I'm going to show it right now. This was shared in the Discord yesterday. And look at the angle over here, the same angle that we're tracking, And you can see that this is a fib level going back over here. And each time we break above, we head into the next fib. They were extended further a little bit. By the way, this morning I was looking to find who shared this with me because I said, hey, could you actually put in some price levels over here? They put it out over there. They extended it a little further, showing what perhaps we could be looking at. And I was scrolling up this morning to find out what the user was so that I could give a big shout out. And I just can't believe what's shared here together in this community. I can't believe whether or not it's right here on the Bitcoin channel, the work that is shared each and every day. By the way, 150 messages overnight. Whether or not it's on the the Forex channel, the mechanical CTM. Big shout out to Gene and Greg, Danny getting involved over there. Everyone working together, right? The macro channel, Pure Vita. Big shout out for all the information you're sharing, everyone. Heath in the scalping channel, day trading. The market structure he puts together over there. We have the Bitcoin channel separated into the HODL channel. There are lots of people trading without leverage. Probably the majority of the community trading without leverage and looking forward to learning so that perhaps as they get ready for the next 4-year cycle, they'll be able to take advantage of that with that low time preference. The Ethereum channel, Alan P., explosive. Thank you for all of your astonishing work that you've done and continue to put out there. We do have the lightly leveraged channel, the crypto channel, all altcoins involved, stocks, commodity, metal. This is by far the best thing going on in finance alone all day long. Anyway, I was just watching it this morning. I couldn't believe what we've done here together. This is Brad's model that we took a look at yesterday in the CTM training session. Jordan, one of the most beautiful training sessions I've attended. I love the way this community works. The membership for Conquering the Markets is priceless. Absolutely astonishing. This is Ian's chart right over here. I'm going to jump over into the 4-year cycle a little bit before I get into the markets, before I focus in on the technicals, before I get that feel for what's going on. And what I'm doing also right now is buying a little bit of time. It's about 48 minutes since the CPI is released, and I want to give the markets a chance to price in what it needs to price in before we take a look and get the situational awareness that I want across all markets. I want to see what FX is doing. I want to see how the yen is reacting. I'm going to put it all together. Right over here right now, I want that clarity. And if you're looking at this chart, and by the way, right now you're looking at the 4-year cycle and you're looking at the bull market phase from previous cycles. Red is the current cycle that we're in. Then we're looking at orange. That was the 2017 bull market phase. And then green is the 2013 bull market phase. And if I'm looking at this chart right now, and if I'm wondering, is the model broken or if I'm right on time, you know, with the utmost clarity, I could see that actually we're right between both cycles. We're completely right on time. We're completely, yes, Ian pointed out very, very appropriately that coming into the shakeout in the 2013 cycle, we came in rather steep and we came out of it rather steep. In the 2013 cycle, we came in steeper than the current cycle in red, and we came out of it a little steeper. Actually, you know what? We've been just level this time. And coming out of it, it's a little more level. We're right on time. That's the type of awareness that is priceless to understand where you are as we continue here for everything to continue to play out as we stay on the right side over here, right? I'm looking here at the 4-year cycle. A lot of people say Jordan, and not just to Jordan, to everyone, how is it possible that you're positioning yourself around a 4-year cycle that you only have 3 data points for? Why would you do that? Why would you do that? By the way, big shout out to the replay crew. I love all the comments that you share each and every day. I read them all and I love them all. Thank you for that. If you're here live right now, could you go ahead and smash the like button, support the channel and the work in the community that we do here together, or wait if you want. And if you learn something new today, or if something clicks for you, or if something helps bring clarity for you, go ahead and smash that like button. But don't be shy. Anyway, we're watching 3 data points, 3 cycles that are playing out, and wondering, why would you do that? Look, I look at things a lot differently than a lot of people, right? I know I feel like here that we all see the matrix, right? Someone pointed out earlier in the comments below this morning as we were getting ready, I see the matrix. Yeah, and we all see the matrix, right? Neo, and all of a sudden, once you see it, you can't unsee it. I'm not looking at 3 data points. Right. Actually, I had this discussion over the weekend with Dr. Bitcoin or something like that on Twitter. Right. Anyway, when we talk about selling the cycle peak, we'll get into that. What I'm looking at over here, and I'm just going to break it down for you really easy, really quickly, how many data points I see. Right. And I'm going to actually not talk about each of the cycles. I'm talking about each individual cycle. The halving point right here where we start. Right. This, by the way, is done off of the previous all-time high. I could pull up the halving tracker, which is doing this off of the actual halving itself. But for illustration purposes, the point that we're starting here, just pretend it's the halving, okay? This is actually for accuracy, right? And for lining up those cycles clearer together is using the first break of the previous all-time high. You have the halving event, right? 1 data point. The most important thing in the 4-year cycle is the halving of the minor rewards every 4 years. It's what causes the supply shock. It's what causes the beginning of the bull run, right? Then what could you see after that? You could see from the beginning of the bull run, there's actually a spike up. That spike up happens to be, you know, a 3x. It happened in the first cycle, it happened in the second cycle, and it happened in the third cycle from the previous all-time high, a 3x. So there you go. You have 1 data point. Now we have 2 data points, right? And then what happens after that? Well, we have this down move, this shakeout, right? We saw it occur in the first cycle. We saw it occur in the second cycle, and now we saw it occur in the 3 cycle. Well, that's 3 data points. Well, what happens from there? Well, we have this I'm going to come back over to here because this is where we are right now and talking about, we have this area that's coming up in just in a couple of weeks, by the way, or in about 2 weeks. In about 2 weeks, where you see all 3 cycles converge. You know, it should be somewhere around Bitcoin, let's call it $68,000, $70,000. And at that point, could you say that, oh, look, yeah, well, 2017 cycle, it's 2013 cycle, they have the same performance? No, this is a point in time when all 3 cycles are going to kiss, right? It happens again over here right before we get into the last drawdown before the parabolic move, and it happens throughout the cycle. We'll look at that right over here on the 4-year chart because there's other areas where that's going to happen after the capitulation low. But right over here right now, we're coming to another point, right? That's number 4. And then after that, you have the cycle, the crest of the wave, the first wave we like to call it, and then another pullback, another data point. That's 5. We come up again for the second wave, 6, right? And then into the peak, 7. After the peak, a couple of things happen. Within the first 2 weeks, a very short period of time, you'll see between a 40 and a 50% drawdown. Another data point, number 7, right? And then after that, a bounce. This bounce is about 50% off from the high to the low. Another one, 9 data points. And then a very important one. Within 6 weeks of the cycle peak all-time high, we see price pull back almost 70%. That's how you know that because a lot of people are saying, okay, well, listen, it's a super cycle. If during the bear market, we don't have more than a 60% drawdown. I agree. If during the bear market, we don't have anything more than a 60% drawdown, it is a super cycle. I'm all aboard that, and I'm bullish Bitcoin and I'm getting myself positioned correctly. But I believe within 6 weeks, we're going to see that 60-70% drawdown is going to be another data point that the 4-year cycle continues to play out. Number 10. From there, you have a bounce, a big bounce. Well, look, as we get closer, the training sessions we're going to be looking on as we're exiting Bitcoin and entering our bear market trades, we're going to be focused on these particular situational awareness points. We're not doing it right now because we're over here and we're focused like this. Predators, right? Either which way, another one is that huge bounce that comes off that 70% drawdown in 6 weeks. From there, you have the grueling nature of the bear market. It goes on for a while. This absolutely destroys people mentally because they don't have the awareness that we have, right? That lasts a while. I'm not even going to consider that a data point. What I'm going to consider a data point is going to be the breakdown, the capitulation, right? Is that all the way up to number 10 or 11? I've lost count. It doesn't even matter. But from there, we have a big bounce. A big bounce and another point where all 3 cycles should kiss. Number 11 and or 12, getting us ready here as we approach the next halving. There are so many data points. There are so many situational awareness points helping us to ride this 4-year cycle, to ride this waves, so that we know at any point that the model has broken. By the way, the model broke over here, but we were so aware of the macro when the model broke to the downside, we knew that this was the time to position in, and then we worked ourselves through it each and every day. All the videos are up online, and what we've done here, what we've accomplished and the way we've done it is absolutely masterful. It's absolutely beautiful, right? Ed, we love you, brother. Ed, we love you so much. Big shout out to Ed. Big shout out to, he needs a hug. He needs a little bit of love. Either that, he needs to get himself on the right side in the most important trade that matters. Either which way, this is what we're looking at over here. The next time someone tells you that there's only 3 data points, how could you believe in a 4-year cycle? Break it down for them, educate them, help them to understand and have the situational awareness that we have, which is absolute, on point and fire. It's the 4-year cycle. I remember it was a training session I was preparing for when I first understood that the 4-year cycle, by the way, the halving event, right? And then each of those points that we just pointed out, it's not just for Bitcoin, right? It occurs throughout all markets. This is the Wall Street cheat sheet. And then everyone else is catching on. Look at this over here. You have the 2017 bull run over here, and then the 2018 bear market occurring over here, the capitulation low, and then that data point we just talked about, that move off the capitulation low, getting ready for the accumulation before the next halving event. It's the Wall Street cheat sheet playing out over and over and over again. And it's absolutely beautiful. Ted, thank you for this beautiful chart. Ted, when I look at your chart over here today, by the way, Ted has added everything to here. You can find the information over in the Discord channel. It's pinned to the Bitcoin channel and in the resources channel over here. He's added all types of alignment from the halving. You can line it up from the prior all-time break, the dip before the parabolic, the scale dip before the parabolic, comparing it to Ethereum, as we see right now that Ethereum right now is tracking the Bitcoin 4-year cycle exactly. If you're interested in trading Ethereum and or crypto. By the way, do you remember before the bull market started and we were lining up, before the alt season started and we were lining up what that would look like and how it had transpired? My whole thing was like, look, if you're interested in it, I think that you should have a basket of alts. And we talked about some of the projects that we thought could perhaps be the leaders. That was the way that I thought was the smartest and still is the way to play it. But you had to do it with a small portion of your account. Hopefully that small portion of your account right now is making up a larger piece of your portfolio. You're probably wondering if now is the time to convert some of those profits into Bitcoin, right? Or if today's the day. I don't think today's the day. But either which way, Brandon, Crypto Trades and Tech, big shout out to Brandon. You can see that he's been talking about over the last 2 weeks how he's been taking profits on certain types of vaults and positioning into Bitcoin just ahead of his time. People don't understand it yet. Looking back, whether it's 2 weeks, whether it's 6 weeks from now, they're going to understand how smart that was. What I'm looking at over here is I look at Ted's chart. Ted, that's right. The thing about conquering the markets, as you all saw yesterday in that training session, the thing about conquering the markets is that there's simply no ego. There's no ego no one's trying to outdo each other. Everyone's trying to work together. And it's absolutely astonishing. The talent that we've attracted, how we continue to sharpen each other, to continue to improve. I never expected the results that we're seeing. It's absolutely beautiful. Thank you, Ian, for that beautiful affirmation of Ted and the work he's doing right here, right now. And I look at Ted's chart and I see, we're right on time. We're mirroring the past 2 cycles. There's no reason whatsoever for me to get concerned. Actually, it's a little bullish. Why do I say that? Well, because we had this cycle, this current cycle, outperforming the last cycle, right? And then as it's outperforming the last cycle, as we come into this period, it's consolidating sideways. Yeah, we did have the shakeout, right? But it's consolidating sideways. It's uber bullish. We're getting ready over here to the period during this first wave where we should see all 3 cycles converging upon each other. At that point, you'll hear some people say, I told you, diminishing returns. Diminishing returns, right? This cycle's probably not going to outperform the last. As we get towards this area of the year, this pocket over there, you're going to see this current cycle. In my opinion, we will soon see, it's not too far away, an average of these 2 before they kiss again and converge upon each other. And then in this, the blow off top stage, the vertical move occurring, right? 35-day period occurring over here. We should see it also averaging somewhere between the 2 cycles. It's that situational awareness. Speaking of a beautiful team, Alan, 5,000 followers today. So honored and humbled. Thank you for all your support. Alan, thank you for everything that you share with all of us, for your unbelievable diligence and work. Thank you for helping keep us all with that situational awareness, keeping ourselves on the right side of the trade. Big shout out to Alan today. Look, it's time to play a little bit of HeadSnack. Let's get into it right now. I'm going to drop him right now to jazz us up here as we continue to keep going.
analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing, the prices might be slashing just to pretend they're in fashion. Hit the like button, comments, and smash it. Boom, boom, Jordan in the room. Grab the bull by the horns and to the moon. Throw from the plateau, make the play. Boom, boom, it's a taco day.
It's a taco day. It's a taco day.
Beautiful. Thank you, HeadSnack. Big shout out to HeadSnack. Danny, thanks for providing those links over there. Yeah, that's right. You could go to the there it is. There's the link. Danny, by the way, jumping in here, offering to help out, offering to spread some love over here, jumping in as a new moderator. Lots of love and a big shout out to all the moderators who help keep this channel and this experience so smooth. We're grateful for the work that each and every one of you do every day. Listen, Heath, bringing it. Brandon, bringing it. Conquering the markets, bringing it. I love it. This is, by the way, Will's chart over here, the log chart on the weekly, right? You can see that beautiful consolidation. Not only that, you can see that last kiss into that line, that trend line support over there on the log channel. As we go higher, I will be reverting back to this over and over again. Let me just put this link into the description, into the comments below. This is, by the way, Michael Saylor, the Chad of all Chads, Michael Saylor, putting out a lot of information. This is on Bitcoin privacy and security basics. I believe he did this with I'm trying to think of the podcast, the one that is the Stephan Levier. You know, Stephan I consider to be a technical expert on Bitcoin. I absolutely do. And he, working with Michael, went ahead and put together this information if you want to understand a little bit more about security and privacy of Bitcoin. Good stuff over there. Self, thanks. Peace and love. Love it. All right, let's take a look at what's going on over here. Let's find out what's going on in the markets as we take a look at the market's reaction. Opened up 5 minutes now, digesting the CPI numbers. Quite expected, but definitely way overblown. The highest readings we've seen since 1981. Let's take a look at what the markets are doing and how they're reacting. We see the dollar bouncing back up. If we get back up, by the way, let me clean this up a little bit. While I keep doing it, it keeps coming back. I'm not going to do that right now with you, actually. All right, this is an important area. The market, by the way, breaking down out of this bear flag, coming in for the retest and being rejected, right? Next move for the dollar, we have our eyes on it. We have the cheat sheet here. Getting back up into the above this line of resistance, broken support, now acting as resistance. People often wonder, everyone's so attracted to crypto right now, rightfully so. It's the bull market. This is where you should be focused in on. And I root for all of crypto. I root for the success of all crypto. Now, I happen to believe that probably about 95% of the projects that are around today will not be around, you know, whatever time frame you want to put on it. But I happen to believe it's kind of like the dot-com bubble. You know, the projects that went on, the companies that went on after the bust of the dot-com bubble, will they thrive? I mean, you're talking Amazon, you're talking Facebook, you're talking many. I don't even want to get into it right now. But the ones that are standing 5 and 10 years from now are going to be absolute juggernauts, giants. I happen to believe that it is highly speculative space. A lot of money could be made, a lot of money could be lost. You have to be very calculated. If you're following conquering the market strategy and principles, right? When I say principles, I'm talking about risk management. I'm talking about money management, right? You're going to do extremely well. And it's kind of easy when you do see the matrix and you're able to line everything up. But if you're out there taking risks and shooting from the hip, you're going to get eaten alive, and you're going to walk away from this event, this moment in a time that should be one step, one building block towards you building generational wealth. Generational wealth. If what we're seeing here, Raul's talking about quote unquote, the exponential age. I don't like it, the name, but the information in that video he put out, I shared with you all, absolutely exceptional, including the first part, which was all everything that we laid out a year ago and over the course of the past year. But you're looking at a major shift that's taking place in the world as we move towards this digital space, right? If you're seeing it now, you're so early, it's ridiculous. You have to be smart about it. Many people that are listening right now will not be smart about it. They will get too greedy. The FOMO will be too severe for them, and they're going to make mistakes, right? By the way, yesterday's video, if you saw yesterday's training session video, which, Plan Brad, absolutely fire, amazing stuff. Probably one of the best training sessions we've had by far, right? There's about another 15 minutes of it that I didn't share yesterday. I'll share with you soon. And it talks about, those that are trading with leverage, when and at what point you need to really back off and know more. Very, very, very important stuff. I will be sharing that with you all soon. Dun, 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 dun. Manuscript. Ooh, Craig. I love it. Did you see Craig and Greg at the same time on the same thing? I love it. Thank you, Stefan. Thank you. Anyway, let me flow back. Let me fall back and flow back. Right? We're watching right now the DXY taking a run into the resistance. Back above this resistance, regaining this resistance line, and we're back into the channel. We're back into this channel that we've been also since mid-December. Going on 5 months, price has been basically sideways on the DXY. This was a big breakdown that occurred, right? And right now we're just coming in for the retest. Let's see what happens. If rejected and resumed down, we could see the dollar fall, and the fall could really gain pace very quickly, especially if we take out the 88.40 level. At that point, we're going to see in 2021 the dollar really under attack. Are we seeing the dollar rise right now? Because with inflation getting out of control, don't worry, it's transitory. The thing about transitory is this, it is transitory. The thing about this is you see prices rise and then level off. And then the Fed will be like, see, it's transitory, but they never revert back down to the mean. You're not going to see all of a sudden prices slashed at the grocery store. It's not going to happen. That's not how it works. They level out before their next move up, however long that takes to happen. All right. So either which way, are we going to see, and we will soon find out what the future markets are pricing in, for 2024, how many rate hikes we're possibly looking at, whether or not the market is now increasing that trajectory or not, right? But either which way, the dollar right over here coming into the resistance so far, bouncing off of it, that could be rising today because the market's like, oh, no, we're going to see some hikes coming in. If I take a look briefly at the 10-year, I can see it's the high of the session, right? Right now, the market's saying, inflation's running pretty hot. They're going to have to raise rates. Let's see what happens as we hear from Jerome and the rest of the banksters. Let's see what they're going to be talking about, and if whether or not we keep hearing from them. No, don't worry, it's transitory, and we'll see how the market reacts. It's too soon to put it all together, but today is an important session to figure out where we stand. How are equities reacting? You saw yesterday, by the way, I'll start with the S&P 500. I'm going to go to the daily first. Well, we got 3 down days in a row, 3 down crows, very bearish, right? But how bearish is it? Is this the start of a bigger correction? Could we come all the way back down towards this support over here? You can see the resistance. I think I want to draw this in. Just so I could watch as price comes into that this was resistance. Let's see if it holds as support right now. I'll be watching the price action off of there. I'm doing broad strokes right now. This is beautiful, Gino. Gino, absolutely beautiful. See, ETH, Grayscale's Ethereum, it scared me a little. The premium was so high. It scared me, but beautiful work, right? There you go, Monica. The cost of energy, Monique, was one of the things that it was food and energy rising. Guess what? food and energy. It makes up a lot of people's, budgets. You could see their wages are not rising, their monthly expenses going up. Thank you, PD Capital. Thank you for each and everything. All right, looking at the Nasdaq, I'm going to jump to the 8-hour on this one, all right, because I'm going to do it with a little bit of precision, right? By the way, we saw the structure originally break right over here when this trend line broke. As soon as that trend line broke, I cloned the line off of the one touchdown over here, and I put it in. Once we broke there, then we saw the breakdown. Into the support, it bounced. Once I had this second line here, the reason I'm pointing this out as I am, because this is what you want to do, whatever market you're trading. If you're focused in on crypto and you have our strategy, our methodology down, you have an edge beyond all edges. This is what I'm sharing with you right now. At the same time, today's a day where I need to put together all markets and see what happens over the next week or 2 or 3. And I'm watching, once this touch came in, or it wasn't a touch, once the bounce off the support came in and the price resumed down, I'm able to draw in this trend line. And I drew this trend line in with you yesterday on the live stream, right? This will be the first sign that a repair is taking place and it's time to get the long the Nasdaq again. People want to buy the dip, right? People want to buy the dip. By the way, we saw overnight in Asia, tech also getting wrecked. We're seeing it happen around the world. Inflation is not good for the tech sector. That's probably the reason why we're seeing this occur right now. The question is, is this going to be a correction? Or are we going to see a crash? I don't think anyone, even with the hot CPI, is expecting a crash in the markets or any type of severe correction. Everyone is aware of the liquidity. Everyone is probably going to be looking to buy the dip. The thing is, you don't want to step in and try to catch a falling knife. That's not how you do it. You want to have that precision entry giving you the highest probability of things going your way. Right now, that's this trend line over here. Now you could say, or I could say, if we make a lower low over here, do I want to add in this line, which is very, very steep? If you were an aggressive trader, right, and probably trading off a low time preference, and you had a break of this trend line, is that the first repair you might want to get long on the Nasdaq? Listen, all I can say, if you do that, if we did see a break and you got long on the Nasdaq, you have to be able to get out of this trade if that line is broken again. If that line that was broken is broken to the downside, you have to get out. You could see that perhaps happening over here. Over here, I'm trying to make it very steep. You could see over here, right? That one touch, that other touch. If you took the long trade right over here, right? As price came down and broke down below it, you need to get back out of that trade. You have to be very comfortable taking small losses. We're not talking about pushing trades today, right? And you cannot make a living unless you learn how to push trades, unless you learn how to sit on your hands. We're talking today about protecting your downside. You have to be able to have your risk levels in place before getting into the trade, and you have to, without question, 100% of the time, you have to respect them. If you ever are in the habit of adjusting your stop losses as price is moving, you're doing it wrong. You have to do your work before you get into the trade, and you have to respect your risk levels each and every time, or you will wind up getting wrecked. All right, if you take the aggressive entry over here and price comes down this is the safe one right now. Things could develop over the next few days where we adjust this and I say, okay, now it's clear. We have another one. This would be highly aggressive. What's more important here is focusing on if you were to break down below that trend line, you need to get out of the trade. All right, that's the Nasdaq over here right now. What else? Let me check out how gold and silver are reacting right now, right? First following gold, and they say, because yesterday I spent all the time fixing these overs, flipping these over. Gold right now has come in, and after breaking this resistance over here at 1880, has gone ahead and it is flipping it into support, trying to resume off, consolidating right above the broken resistance as support. It looks very bullish over here. Our rising yields that we're seeing today going to put gold under pressure. It's not happening so far. Gold is basically unchanged on the day. Again, making those types of observations is the way you do it. Thank you, Mickey. I'm just so glad that you're here. Thank you, Mickey. I'm just so glad that you're here listening. All right. Silver, what's going on? You know, silver also. You could see where my mouse crosshairs are right now. If I were like focused on trading silver, and I'm not, like entry, pushing the trade. Let's see what happens, right? That's it. From pushing the trade. No, I don't even need to lock in a little profit. This is either going to be the one that goes or I'm getting out at break even, right? But if I was focused on this, follow my mouse over there, you could see that what's happening over there, just like on gold, that resistance level has been taken out. It's a lighter resistance level. You could definitely see it in play. If you follow the crosshairs to the left, if you go back towards the end of December over there, you could see that's exactly where we are. You could see it in play a little bit right over there. Either which way, price has gone ahead, broken that light resistance, and is consolidating above it. Both gold and silver unchanged on the day as rates are rising and the dollar is rising. Pretty bullish so far. Watch what happens going into the London close. If you're focused in on the metals, that's when a lot of the manipulation occurs. That's when you see a bunch of like unreasonable amount of paper just being sold against them. We'll see what happens. They could get volatile on a day like today. All right. That's why I have that higher time frame. Right? Up $2.50 on it, just chilling out, waiting. If yields started actually going gangbuster, right? If all of a sudden, like this session, we take out the resistance at 176 and price is going up, and I see all of a sudden that, yeah, gold and silver are under pressure, is it maybe smarter then to lock in some games and wait for the murky waters to settle and get back in? Perhaps, it depends on what size that position is for yourself relative to your overall portfolio. All right, what else are we seeing? How is I just wanted to take a look at a little bit at commodities. I'm looking over here. I'm seeing copper actually under a little bit of pressure. Nickel continues to be under pressure for a while now. Look at that. You can extend that resistance out over there. We're consolidating right below that resistance. Personally, if I was involved in something like this, I would be waiting for either a breakout above that resistance or a move back lower into the support over here as occurred down. Look over here. You can see I don't know what happened with nickel over here as it got demolished, right, from the resistance. But once it broke back above that trend line resistance, it then came back down, confirmed it into support, and the resumption up. That's when you want to enter. You want to be preemptive of momentum, not chasing it. I saw Pomp put out a tweet yesterday or this morning, and he said something about there are two types of investors. There are those that are foreseeing trends and position themselves ahead of time, and those that are chasing them. The first one is the one that makes money. The latter loses money. Is who we are and what we do. We're preemptive of moves. We're buying off of support, right? Selling into resistance. A lot of people, as price moves up, they're like, that FOMO kicking in. How many people are buying AAVE this morning as it's up 20% versus Bitcoin, right? How many people, by the way, were focused in on alts, and they saw right over there the launch ramp. They saw the trend line correction, and on the break, they took it, conquering the market's principles and philosophies, right? Are there any charts, by the way, in the crypto channel, AAVE charts this morning? I would be interested to know if anyone was tracking that. Either way, just an example as we continue over here. I want to just take a brief look at what's going on in FX, and by doing that, I'm looking at the percentages over here today, right? And I'm going to get a feel. So I could see right now, it's a big move in FX is 1%. It's a really big move. And I can see the Canadian dollar is up 1% versus the Australian dollar. The first observation I'm making, what do I attribute to? Probably the price of oil, right? What is the price of WTI? Up 1.2% today at 66. Let me just pull up a chart today. Look at this work we did. Look, do you remember this work that we did? And when price was consolidating over here in this area, drew in this line and said, you have to wait. And then as price bursted up, we don't take breakouts, by the way, on commodities. We don't take breakouts like this on commodities. We don't take them in foreign exchange. We don't take them on stocks, on index. Always breakout, retest, resumption. This is a trade that got away from you. You do not chase this, right? But then you could see the pullback, right? I wouldn't enter here. But over here it becomes very clear the breakout, the retest, the resumption. Either way, the structure is beautiful and it's beautiful to watch. We're watching oil perhaps getting ready to make new 12-month yearly highs over here. Is that why we're seeing the Canadian dollar a little bit strong today? Perhaps. I could see it versus the New Zealand dollar as well, up over 1%. What else? What other observations are there out there today in FX? So the Australian dollar very weak versus the US dollar. We're seeing the US dollar. By the way, do you remember how we're just like prices sideways, consolidating? I want to stay away. I want to stay away. That would change. I think this would change right now if we resume down off of this test. If this holds over here, this bear flag breaking down the support, now looking to hold as resistance. If that holds and we resume down off of it, I think that's the time to really say, okay, the dollar has been consolidating pretty much sideways versus all pairs for a while. I think it's time now, if we get the resumption down, to attack versus the dollar, to attack the dollar. Whew, that's a mouthful, right? We almost made it to 1,000 likes. We almost made it to it. That's okay. I like that 1,000. I like that 1,000 likes marker. I'm sure the replay crew is going to get that going. There was a couple of questions, people wondering, right? Listen, Jordan, I would like to dive deeper in to the community. How do I get onto Discord? I'm not interested in the training program. I just want to be on the Discord. Well, that's fine. You listen. It's included in the price of admission. The training course, the CTM, and by the way, absolutely priceless, invaluable information. It costs next to nothing, but it includes all of the Conquering the Market live training sessions and all the past ones. It includes all of the work that I put together on foreign exchange, because that right there, that is the guide. That is the essence of how you trade all markets. And if you want to be able to trade crypto with better precision than anyone else out there, then you need to focus on the education that I've laid out and how I laid it out. The foundation that I built is the one of strength, and it's going to be able to put you in a position where you're able to trade any market. You could put any chart in front of me without showing me what instrument it is, and off of price alone, I could trade it. That's what's there for you. It includes the Discord community, which is absolutely astonishing in itself. I could just follow what's going on between Conquering the Markets and that high level of knowledge that the team works together each and every day, and follow what's going on in any of the channels I'm interested in. And it's absolutely beautiful. All right, I digress. Where are we at and what's going on? Let me take a look at what's going on with the corn, right? We see Bitcoin now unchanged on the day. Watching this line. Watch. When is the rip your face off move going to happen? We're right on time. We're right on time. And when I say we're right on time, I mean, look, we are right between. We've been averaging the 2 cycles. We're right between right now at the right time, coming off that shakeout. By the way, but we had that warning sign, right? Warning, look, the first 2 cycles we had a shakeout around this time. Watch out for one. Price broke up over here. I'm long. I'm not long. I mean, I'm fully positioned and more, because at this point in time, we could see that next wave approach. And then all of a sudden, boom, the shakeout occurs, right? As the shakeout's occurring, we had that absolute precision accuracy on the repairs. I did take an aggressive entry, and it was over here, right? You all know it, but just in case you don't, because we just looked at this on the Nasdaq. So I'm going to look it to you right now. Hold on one second. Let me just put red because it was bad. Red. Oh, red doesn't work. Let me put yellow because it stands out. All right. Let me zoom in a little. Oh, this is we all got out, right? Very well, right? I myself, I think a little bit higher than everyone else. That's fine. By 58.50, you needed to be out. Brad showing us where he got out yesterday, and that was all the way at 60,000 and or above, showing the trend line break. Either which way, over here on this trend line break, I got long here at 55,500 as price broke out above this aggressive trend line. That's why I'm warning you. The steepness of this line on the Nasdaq, if you add this one in, it's very steep. If it breaks above, you got to get out just as quick. All right, back over to Bitcoin and what was going on. By the way, do you know how much you could learn from your mistakes? But do you take the time to learn from your mistakes? Do you ever sit down and really try to rewire your brain? It's one of the most underrated, most important things that goes on in the markets. Breakout above here, highly aggressive. Many of you thought, hey, that's really aggressive. I'm going to fall back and wait. I took it over here, and then I had to get back out, right? I got actually a little lower. It's 53,000 I got out, right? I break out. Once you get back below, and that occurs right, 53. Okay, pretty good anyway. Either which way, and then it was tracking this line over here. This line over here was very easy to set up. We all set it up together. This was beautiful. I'm going to make that a little bit darker right now, and that was the entry. And if you're following the price action that was occurring over here, as you saw price rising sharply over here, we talk about, again, Jesse Livermore, the great Jesse Livermore, and that tape reading skills. Either which way, I also pointed out that point, the 3-day for you. I also showed you, was it the 3-day or the daily? It was on the daily. This over here, I pointed out on Twitter as it was happening, and I said this is the first time price is making a higher high in, I think, 12 days? Right there was the entry. Now on the higher high on the daily, as well as that trend line break over there. It was $50,500, the latest entry that you were long again, bringing us in here with that precision entry. I digress. I don't even know where I was going with that. But let me clean up a little bit. Let me clean up and continue. It doesn't matter where I was going with it. We'll just continue. Here we are right now waiting for that. Oh, this is what I was showing you. I was showing you what was going on over here as we broke up to the top, had to get out. We came back in, and then at the bottom of the shakeout, positioning ourselves long again. Now, listen, if you're trading Bitcoin without leverage, if you're invested in Bitcoin, the awareness that we bring is helping you with the greatest calmness to have, forget diamond hands. Our hands are way stronger. I don't even know what to call them. The strongest material, the strongest, element in all of the universe is not our hand. I mean, we're not that strong, but we're almost there. We could talk about it, but that's the hands we have. And listen, if you don't need to trade with leverage. Bitcoin is so volatile, and you could do absolutely astonishing things riding the Bitcoin wave, staying on the bull of bulls, trading the 4-year cycles, broken up into the 3 distinct phases without any leverage, and do absolutely astonishing things. When we're talking about leverage and when we trade it, yeah, that's definitely more advanced stuff, but just take the precision that we're talking about and translate it to where you are and what you're doing. There it is right there. What? Vibranium. Vibranium hands. El Jefe, big shout out, my brother. Right? Thanos. No, we can't. Come on. We got to stay with the good. So anyway, here we are right now getting ready for what's occurring over here. I'm bringing it back to price. The breakout of this trend line, and we can see that we broke above it. You see how we broke above it but never held? Right? Over here on this bar. Again, broke above it, never held. A breakout and a breakthrough of that trend line is what sends off this next move. We were preemptive of it. And when I say we were preemptive of it, as we were at the bottom, I'm like, this is the beginning of the parabolic move. What is he talking about? That makes no sense. When I'm talking about the parabolic move, I'm talking about this particular data point, the shakeout into the peak. That's the parabolic move. It's the second half of the bull market, only instead of like as it's occurring and like the melt your face off move is happening and everyone's like, oh, why am I still in alts? I should have been in Bitcoin at this particular moment. We're going to be like, no, we called it at the bottom. We called it at the bottom of the V. That's the beginning, right? And then we broke it down into that first wave. We know that there's a pull into the second wave, setting up here those 35 days to the cycle peak and top. I saw this over here. This is called the golden bull cycle ratio. But what it's talking about here is that the bear market from the bear market low to the halving is 51%, and then the bull market from the halving to the peak is 49% in length. This is the way we did it from the beginning. It's the same thing, right? Remember we looked at the bear market low to the halving and then approximately less 2% to give us that guide of September. I think a lot of people are very aware that perhaps this cycle peaks, right, towards the middle to end of September. But very early on, you were talking about a lot of people saying, well, the past two cycles peaked in December. This one peaks in December. And then you have people like my boy, Alan's my boy, but Raul being like, oh, it's probably going past December. I don't know. We'll see when he exit. We'll see when we exit. We're going to get it right. But seeing that different view of the same awareness we have, I love seeing affirmations and confirmations of our own situational awareness. Is really important to make sure that we continue to keep that important focus and staying on that right side of the market over here. So we're looking at Bitcoin unchanged today. Ethereum continues to push and crush. I'm interested to see what the overall Bitcoin domination level is right now. Last I checked, it was 44%. It was back in this point that we peaked out at 37.8%. Right now, today, we're still at 44%. People are saying that TradingView and CoinMarketCap, when you look at Bitcoin dominance, give different readings. I'm going off CoinMarketCap. It's what I was looking back at in 2017 during the bull market. I'm just sticking with what unless someone could let me know that listen, there's a distinct advantage of using something else. I'm just going to continue with the broad strokes that I use. And we're coming towards this particular point in time, last time, where Bitcoin ran up until that last, call it 3 weeks of the bull market. The last 3 weeks, by the way, of the bull market, when I say last 3 weeks, right? Let me pull up Ted's chart. When I say the last 3 weeks, and I'm looking at the rocket ship, right, to the peak, 35 days, right? 35 days at least in the first cycle, 35 days in the second cycle. Will it be 35 days again? Well, I don't know. There's only 3 data points. How could you be basing this off of 3 data points? Yeah, I see a lot more than 3 data points. I see a lot of symmetry in this program money. There we go. Listen to this, Steve. Navigating that shakeout was like 101 for these upcoming waves. Patience, time preference, right side of the trade, and gratitude. And Steve, it's true. Everything that we do each and every day is all cumulative. It's what helps us. It's why our level of crushing it continues to increase and increase. And when Ted shares something with Ian, and then Ian looks back at it and shares it with Ted, the two of them continue to lift their game up and up and up. And then they share it with the community. And then someone else is like, wait, boom. And then Brad is like, oh, wait. Brad's like, boom, and just helping us all see it all so clearly, keeping ourselves on the right side. It's beautiful. It's beautiful what's going on over here. Alex. Oh, boom, 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 boom. So listen, Jet, do you think that dominance is a good metrics? I mean, Bitcoin is being compared to all these pre-mined coins with huge supply. Yes and no. So it's a great question. What I'm looking at when I look at the Bitcoin dominance is simply this. All right. All as I'm looking for is right now, as we're seeing, this is not the exact same, by the way. We're off by a couple of weeks from last cycle. And if you notice that this week I've been saying, something's a little bit different. Something's a little bit off. I'm just making observations. We're off by I don't know if it's a couple or a few weeks. It's a little different. So, is this time different? And does Bitcoin dominance not return? Do we not get this rise into the end of the bull market here? From this period over here. Hold on. Let me just grab that awareness with all of you as I explained. Right? If this doesn't happen, if we don't make the first wave and the second wave, right, which so far to date, we're right on time, and we expect that every single data point up until today has hit, and until the model breaks. Stop looking for the model to break until it breaks. You have your situational awareness to know when it's broke. But to be looking to pick tops and to pick bottoms, which is the same thing as looking for a model to break before it's broke, that's not how you do it. Either which way, when we see this move begin on Bitcoin, which hasn't begun yet, we have okay, once we break out, once we break out above here, once we take out that all-time high, it's happening. At that point, we should probably see Bitcoin dominance returning, right? And that's what I'm interested in seeing. I'm interested in seeing this take place, however the art presents itself this time, so that I know coming into the last move of the Bitcoin blow off top of the vertical move over here, that when alt season peaks, alt season number 2 takes place, right? Because this is Bitcoin's time. This is Bitcoin's dominance time, and alts get punished versus Bitcoin during this area over here. And it's grueling. And a lot of people that are all FOMOing at the top of the first alt season, we were way preemptive of it, telling you over a year before when it would happen, approximately 6 months after the Bitcoin halving, and why I thought that, and then it playing out. Now we're towards that peak. We're coming into that peak of that first alt season, setting up the second alt season. To set up the second alt season, I need to see Bitcoin first dominate over here during a period, right? Into this move over here. And if that's happening, if I'm seeing that data point, that situational awareness playing out, listen, there's a huge opportunity over here that takes place within a few weeks. Now on Bitcoin, the majority of Bitcoin's gains are made in that 35-day period, right? Same thing with altcoins. Listen, if I could time it to such precision that I don't need to be spending all of these months rolling it out and just concentrate, into a highly volatile period, understanding it with such precision. That's what I'm looking to do. That's before we got on, by the way, I get on my knees before every single session. Before every single session, I get on my knees, right? And I look into the eyes of the Lord. I ask him, please, may they hear you. May they hear you, right? I didn't know if we were going to have anything to talk about today. And I said, look, I feel like it's going to be a grinding session, and I'm here to put in the work. I'm here. When it's the most difficult, that's when I'm showing up. Do you remember going back a few weeks ago, with fever, showing up, making sure that I'm here when it matters most? Look, when it's easy, as the melt your face off move is taking place and we get to enjoy it, yeah, we'll turn up HeadSnack and we'll turn up Honeymoon and we'll be like, yeah, that's awesome. But the only way that you get there and get to enjoy that is putting in the work when it matters and when it counts. Thank you. Thank you, each and every one of you, for all of your beautiful. Thank you for each and every one for being so beautiful. How about that? Yeah. So I disagree. The outlook for the DXY looks grim. So you can't disagree with me if you think the outlook for the DXY looks grim, because I'm bearish on the dollar. You can't listen, bro. My sister. You can't jump in and be like, look, you got to put the work in. You got to put the work in with each and all of us, right? I was a huge dollar bull, by the way. Let me take off Ted's chart over here, which is getting in the way. Boom. I was a huge dollar bull, up until here. Up until this technical breakdown, and then bearish on the dollar, bearish on the dollar, bearish on the dollar. Went long up here. I had to do it. We broke above the support, and then flipped back down. I showed each and everyone why. We are very bearish on the dollar right now. Not only are we bearish on the dollar, right? Our base case of what happens this year right now, why we're bearish, is once we take out the 12-year low, the 12-month low, the support over here at 89.40, right? Then we're coming in to test the low over here at 88.40. If we lose that, forget about it. We're going to see a sharp move into 88.40. We're going to see the dollar really strongly devalued. But right now we got to focus in on we have that precision. And if we break back above, oh, by the way, how about this? Will you all bear with me 1 second? Look at these trend lines that are here. If you go back to the January 4th, January 5th video, where I did that absolutely beautiful work on the DXY, giving us all that awareness of what's going on. These trend lines were drawn in back then. These trend lines, and look what happened on the breakdown that held us support, and now we're coming back in to test that. Let's see if that, which coincides with the resistance, holds or not. But I'm focused in right now on more of a swing trader's time frame. I'm following that bear flag. We had the breakdown into that channel support. Interesting, right? And now we're coming up and we're testing the resistance, right? If we break back above this area, the dollars is back neutral on a swing trader's time frame. We're back into the bear flag. It's no longer breaking down bearish, coming in for the retest. If we zoom down, it's the time to attack. And I'm saying when it's the time to attack, that's when you want to look to play different FX currency pairs versus the dollar. But right now, you're just waiting, lining it up as price continues to consolidate sideways on the DXY, getting ready over there. All right. Sometimes I don't know if the way that I communicate is confusing, or people are just kind of like jumping in and they're confused because they don't have that same perspective that we have. And when I talk about trend lines, see the trend lines that are so accurately in play right now. This is what I shared with everyone back on that January the 4th video, I believe it is, on the channel. It's titled DXY if you want to watch it. It's super important. I think you should if you haven't and you're interested in the DXY and the dollar. But you can see right now in real time how those channel lines are so in play right now. Look at that breakdown, held as support and into that resistance right now. It's beautiful stuff. It's like poetry. It's this type of artwork right there. That's like poetry, you know? And we're looking at Bitcoin trading at $56,672, unchanged on the session. Unchanged on the session, right? I'm looking at on the daily time frame. We've made a higher high on the daily. We've made a higher high on the daily, right? And, you know, it's a doji, but a doji mid-bar like that is not a reversal pattern whatsoever. A doji up here, that's a reversal. A doji at the bottom, that's a reversal. We're in the middle right over here. We'll see what happens at the end of the session. And that's our session, right? It is a good one. I didn't know if I was going to have anything to talk about. I sincerely didn't. The agile, you should see what happens over in the Discord. These guys are amazing, right? Thank you, TJ. Thank you, TJ. You've been here for so long. Thank you so much for spending all this time together. You know, breed love, yeah. So listen, my own thoughts and opinion is when the Investors Podcast, Preston, started doing that weekly Bitcoin show. The first one was like dispelling Bitcoin FUD or something like that. And it had Breed Love on. And it was a phenomenal podcast. People said that, what was it? Michael Saylor's playlist with Breed Love was like, it's like too philosophical for me. Philosophical? Is that a word? For me, personally. But listen, that's the thing about the whole community is that there's so many different variations and nuances and flavors that you get to take from here and from there and put them all together and make the most amazing Sunday there is, you know? And it's all beautiful. It's all beautiful. All right, everyone. Let's play some honeymoon vocals and then see where that takes us. Brooke. I have to laugh, Brooke. That's so funny. Wow, let me pause. I gotta stop. Yeah. So anyway, Sean, I think a lot of people are talking about this. You know, a lot of people. Saw some dude, the Wolf. I don't know. I follow him on Twitter, talking about he's feeling like this is the top over here, and a lot of people are. I don't understand it. Look, if you're looking at on-train metrics, they've never been stronger. If you have that understanding of that hyper awareness of the 4-year cycle as we do, we're completely right on time. Halfway through the cycle, that consolidation that's taken place in the first cycle, in the second cycle. Listen, you know, I have no idea. How about that? Why people would think this is the top of Bitcoin, right? Did you see what was Plantar? Is that the name of the company? I don't know if I pronounce it right. That evil company. talking about in their earnings call yesterday, getting ready to put Bitcoin perhaps on their balance sheet, right? At the end of Bitcoin, come on, we're not even getting started here. We're not even getting started either which way. Let's take a look. Thank you, Dave. Sunshine, this is it. This is it. This is the most, this is it. This is it right there. Beautiful. Thank you for sharing that. Dan, thank you so much. Thank you, Dan. Yeah, big shout out to the mods. Danny, thank you for joining the team over there. Thank you for all the wonderful work you guys do each and every day. Elias, Theo, big shout out. Lots of love. Thank you, Gino. Right? You can see it back within the range. Back into the range over here. By the way, stay away from sideways markets. Stay away from sideways markets. Big shout out, 5,000 followers on Twitter. So well deserved, so valuable over there. My brother, Heath. I can't wait to do a session with you. We got to set one up. I would love to do a session with you, Heath. Brad, thanks for everything. Brad, absolute killer stuff yesterday. Plan Brad, the most important model there is. Everyone, have a beautiful day. I'll talk to you tomorrow, and I'll see you soon. Tom, I found a great way to improve my perspective is by giving. Try a random act of kindness today. That, Tom, is setting the tone for everyone. Tom is setting the tone for everyone. And Tom, for me personally, that has to happen within my family. I just have to make sure that I am, just giving each and every day as much as I can to everyone around me. All of you, thanks for giving so much. I appreciate it. I'll talk to you soon.